Hello everyone, this is Paris. Welcome to Budgetholics. In today's video, we're going to talk about the 5 best dividend stocks to buy in April. If you're new to the channel, this is a monthly list I release at the end of each month or at the beginning of each month, talking about the 5 best dividend stocks to buy during the coming month. If you're interested in that sort of stuff or investing in finance in general, please hit the subscribe button and the bell notification. And of course, if you like the video, please hit the like button as this helps me immensely with the YouTube algorithm. Without further ado, let's jump into the video. At number 5, we have Realty Income, ticker symbol O. Realty Income has proven to be one of the safest real estate investment trusts out there. Through their long history of dividend increases as well as their 2020 performance, Realty Income has proven to be one of the best stocks in terms of commercial real estate. Although the company has a very diverse portfolio of assets, it has not been immune to sector damaging events. An example is its 5.6% allocation to theater venues, which of course was a sector that was heavily disrupted during the shutdowns. Realty Income currently owns more than 6,500 single-tenant net lease properties. They operate across 50 states. Some of their largest clients are Walmart, Walgreens Boots, and Home Depot. In 2020, they displayed a 2.1% growth in adjusted funds from operations despite the shutdowns. Plus, this is one of the few stocks that pays monthly dividends. Realty Income has a PE ratio of 56.25. They have a payout ratio of 206%, but a price to adjusted funds from operations of around 75%. When evaluating REITs, the usual payout ratio metrics do not apply, because firstly, they're required to have over 75% of their assets in properties, and secondly, they're required to distribute 90% of their profits as dividends to shareholders. Realty Income also has a very impressive 5-year annualized dividend growth rate of 62.58%, and they've been growing their dividend for 27 consecutive years, making them a dividend aristocrat. The current dividend yield is 4.37%, with each stock of Realty Income costing $63.98. The analyst consensus around Realty Income right now is a buy, with the price being $6 below the average analyst's price target of $69 per share. O has appeared again and again in our dividend list and will continue to do so, as it's one of the safest commercial REITs with a great performance throughout the years. At number 4, making a second appearance after our March dividend list, is Rowe Price, ticker symbol TRO. TRO is an investment management organization. They have 1.47 trillion assets under management, and they operate in North America, Europe, and the Middle East, as well as the Asia-Pacific region. Their services include mutual funds, sub-advisory services, account management, retirement plans, and financial intermediaries. They serve both individuals and institutions. Despite the rise of different index funds such as Vanguard, Rowe Price has maintained a significant amount of assets under management. In terms of metrics, they're quite cheap. They have a P ratio of 17.26 and a payout ratio of 53.53%. More importantly, especially if you're a dividend growth investor, they have a 5-year annualized dividend growth rate of 73.08%. Rowe Price has been increasing their dividends for 35 consecutive years. This means that they withstood the 2008 crisis as well as the recent illness. Currently, Rowe Price has a dividend yield of 2.14%, with the stock trading at $172.22. The current analyst consensus is a moderate buy, and the stock is currently trading only $4 below the average analyst's price target of $176 per share. Rowe Price is not one of those exciting companies such as the Teslas and the Squares of the world, which we reviewed in our previous video for Cathie Wood's portfolio. But still, it's a very safe company if you want to start building a passive income through dividends. Number 3 on the list is Broadcom Inc., ticker symbol AVGO. Broadcom operates in semiconductors and infrastructure. They offer infrastructure software such as mainframes, distributed databases, cybersecurity, and payment security. They offer networking services such as high-performance connectivity for enterprises, service providers, and data centers. They offer storage and server connectivity solutions for enterprises and data centers, broadband products, from routers to chips for smart devices such as smart TVs. Mobile device connectivity solutions such as 5G and earlier generation chips, as well as Wi-Fi, Bluetooth and satellite chip components. And finally, they have an industrial segment which offers chips and services for automation, renewables and automotives. Broadcom has a P/E ratio of 52.75, so it's more on that expensive side of stocks. Their current payout ratio is 53.67%, within the 40 to 60% range we're usually looking at, but they have a 5-year annualized dividend growth rate of more than 700%. They've been growing their dividend for 10 years, so they're not yet a dividend king or aristocrat, and the stock currently has a dividend yield of 3.59%, valued at $472.60 per share. The current analyst consensus is that of a buy, with the stock trading below the average analyst's price target of $511 per share. At number 2 on the list, we have Abbvie, ticker symbol ABBV. Abbvie is a pharmaceutical company that spun off from the fellow dividend aristocrat Abbott Laboratories. Recently, Warren Buffett has also been building an Abbvie position. Some of Abbvie products include Humira, a rheumatoid arthritis drug that has been approved for numerous other ailments, and it's on the way of becoming the best-selling drug of all time. Imbruvica, a cancer drug, and Androgen, a testosterone replacement therapy. Abbvie also owns Allergen, the maker of Botox. Currently, the ABBV stock is trading at a P/E ratio of 30. It has a very safe payout ratio of just above 42%. Abbvie has a 5-year annualized dividend growth rate of 133.66%, and they've been growing their dividend for 49 years, which is 1 year short of their becoming a dividend king. Abbvie currently has a yield of 4.53%. The stock is currently trading at $106.38 per share. The analyst consensus is a solid buy, as the current trading price is below the average analyst's price target of $122 per share. AT&T is an honorable mention for today's list, but at number 1 we have another telecom stock, which is Verizon Communications, ticker symbol VZ. Verizon operates across 3 segments. The first segment is the Verizon Consumer Group, offering wireless communications under the Verizon Wireless brand and wireline communications under the Fios brand. They operate both a traditional copper-based network as well as a 100% fiber optic network. The fiber optic network is expanding across regions as well as improving existing copper networks.
This is the 5G that's built for you. This is 5G built right, only from Verizon.
The second segment is the Verizon Business Group. It also offers wireless and wireline communications as well as video and data services, corporate networking solutions, security and managed network services, local and long-distance voice services, as well as network access to deliver various Internet of Things products and services. Finally, the third segment is Verizon Media, which is the segment that owns various media companies such as Yahoo and AOL. Currently, Verizon has a P/E ratio of 13.63. The company has a payout ratio of 49%, which is right in the middle between the 40 to 60 range we're usually looking for, and they have a 5-year annualized dividend growth rate of 11.63%. They've been growing their dividend for 16 years, and the current dividend yield is 4.27%. The stock is trading at $58.6 per share, and the analyst consensus is that of a moderate buy. VZ is trading below the average analyst's price target of $60 per share. It's always good to have exposure to a range of different sectors, such as technology, although I don't know what this means anymore, telecommunications, healthcare, energy, and so on. Through this list, I'm trying to create exposure across all sectors, but I'm also supplementing my exposure with growth stocks. If you agree with this list, please let me know down in the comments and tell me what are your dividend stock picks for April 2021. If you're also interested in a growth stock pick list, also let me know down in the comments. Keep in mind, I'm not a financial advisor and this channel is for entertainment purposes only. When it comes to investing, keep in mind that your capital is always at risk and always do your own research. If you need further advice, seek the help of a certified financial professional. If you enjoyed this video, please hit the like and subscribe button, as this helps me immensely with the YouTube algorithm. Make sure to check the playlist for dividend stock picks if you want some more stock pick ideas. Until we meet again, don't stop investing. Cheers.